Okay, so now let's start talking about the different types of insurance. We're going into chapter 38 now. Probably the biggest one is life insurance, and this is something I actually believe in. When you pass, this life insurance policy kicks in, goes to your beneficiaries, so that obviously your funeral expenses can be paid. That ensures that your family's taken care of, that sort of thing. But by definition, it's a contract whereby the insurer agrees to pay a specified sum or sums of money to a beneficiary upon the death of the insured. Okay, so you have a contract with the insurance company. Upon your passing, those funds are then given to your beneficiary, most likely your children. There's obviously different types of insurance. Look at this. Term insurance. Contract are those whereby the company assumes for a specified period of time the risk of the death of the insured. Now, why would you want this? This is for your house, okay? Let's say, hypothetically speaking, you have a house, okay? $100,000, right? How long is your mortgage? Typically 30 years. So you get a term life insurance policy for 30 years for $100,000, so that in the unlikely event of your passing during that time, hey, at least the insurance kicks in and pays off your house so that your family has a place to live, right? Kind of important. Endowment insurance policy is decreasing term insurance plus a savings account. Check this out. Part of the premium paid to the insurance, while the rest earns interest at the end of the term. The savings will equal the face amount of the policy. So you go along and you pay, and at the end, hey, you get the money back. It goes into a savings account. Whole life insurance. Life insurance policy that continues assuming the premium is paid until age 100 or until death, whichever occurs first. So this is for your whole life. Whenever you pass, you get X number of dollars. Okay? If a person lives until age 100, they collect the face amount as an endowment, just like as an endowment insurance that we just saw. Now, what's really interesting about this is that you can do whatever you want. There's all sorts of combinations and whatnot. But a combination is that the above can be combined to an almost endless variety of combinations to create slightly different contracts. Remember what I said in the beginning about contracts? As long as all parties agree and it's not illegal, you got a contract, right? So you have all these different terms that you can mix and match in your insurance policies to get what best suits you. Okay? Let's see. Limitations. Obviously, if certain things happen, the insurance company's not going to pay. If you commit suicide, they're not going to pay. Okay? If something happens as a result of war, they're not going to pay. Now, wait. Y'all are all probably saying, what about our boys that are overseas? Well, guess what? Whenever those individuals go overseas, there are already things in place that take care of soldiers. I mean, the government takes care of our soldiers, which is a good thing. Payment of premiums. Okay? When premiums are not paid, you're in breach of contract, right? The policy might lapse or be declared forfeited at the option of the insurer, the insurance company. Paying additional premiums, the insured may generally obtain a policy containing a waiver of premiums that become effective if the insured becomes disabled. Okay? Folks, people aren't out there just to take your money. They want to have legit business. So, if things go bad, all you need to do is call and work it out. Okay? For example, they have grace periods, 30 or 31 days in every life insurance policy, which gives the policyholder a period to pay its premiums without it lapsing. So if you forget to pay a bill, they send you another one in the mail, you pay it, it's no big deal. You miss 2, it's no good. Incontestability. Period of time, usually 2 years, after which the insurer cannot contest the validity of the claim. Okay? So this means that, hey, things happen, the insurer, the insurance company, cannot say, hey, this isn't any good. Okay? Change of beneficiary. Can you change your beneficiary? Of course. Let's say you don't like your spouse anymore and you get a divorce. Do you really want your former spouse to be your beneficiary on a life insurance policy? No. Okay? You can change it. Assignment of the policy, right, may usually be assigned by the insurer to another. So you pass, your child is the beneficiary, they take that insurance policy, they assign it to the funeral home, the funeral home collects that money, and that pays for your final expenses. Okay? Annuity insurance. Contract that pays the insured a monthly income from a specified age, generally age 65, until death. Alright? So you pay in all this time, and then once you reach 65, it starts paying you back, the interest and whatnot. Okay? Joint and Siver annuity. This is annuity paid until the second of the two people die. So if you and your spouse want something like this, you pay in and you pay in and you pay in. And then when you reach 65, it starts paying out. And then guess what? One of you pass. Well, that money keeps on coming until both of you pass. So there's all sorts of different options you can do with life insurance. And it is something that I think is legit, especially if you want to make sure that you provide for your spouse and your children in the future.